What's up, everybody? Welcome to the Stocks channel. My name is Cory, and in tonight's episode, we're doing another stock market technical analysis update. And we are back to the Monday through Friday schedule this week. Now, before we get into these charts, you know what you gotta do. Go ahead and smash that like button and subscribe to the channel to follow along with all of my updates. Now, first up, we have the ticker symbol SPY, which is the SP 500 ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. All right, so just a quick reminder, we are still expecting an ABC correction right now, and we do see that we're still in a downtrend. Now, we know we're still in a downtrend because we still have that 5 EMA trading below the 13 EMA, and we are seeing these moving averages now acting as resistance when they were previously acting as support. So we've seen a trend shift from the bullish trend when the 5 EMA was trading above the 13 EMA and these moving averages were acting as support, to now having the moving averages crossing down under to the downside and seeing these same moving averages that were support now acting as resistance. So we also see on the SP 500 SPY ETF that we did get up to the 13 EMA multiple times and test that level of resistance and ultimately get rejected and close lower. Now today we did close above the 5 EMA, but the previous 6 days of trading were closing below the 5 EMA. So we see that trend shifting and we see the downward trend beginning to build some momentum. And yeah, while we do have a temporary cool off and we're going sideways a little bit lately, there is still more downside potential to the market that we could see for the remainder of the month of September. So I still think September is a correction month for the stock market, and I don't expect to see any explosive moves to the upside unless something unforeseen happens, like the Fed's meeting goes really well and the Fed does something to excite the market. But right now, strictly talking about the technicals, we still see this bearish trend and we still see these moving averages holding the price action below them, which is telling us that there's a lot of selling at those levels. Now, we don't want to see a lot of selling if we're going to be bullish on the market. We want to see a lot of buying. And we do see on a day like today where there was a green price action, we did have lower volume. So we're seeing this trend continue where we have higher volume on selling days and lower volume on buying days, which tells us that there's still more selling coming. Now, that could change if we start to see volume pick up on the buying days, but right now, if we're trading with what's in front of us, we see more selling than we do buying. So some of the levels to watch on the SP 500 SPY ETF is this previous high that we had after this drop, which is right around $342. Now, if we can get up and close above $342 and we can see the 5 EMA cross back above the 13 EMA, we could see some strength return to the bull side. But right now we don't see that, and we see more bearish evidence than we do bullish evidence. And we also did see this gap holding up as support, but we have yet to close this gap, and we still have gaps down here at $330 and $327. So I would still expect to see those gaps get filled at this rate. And I think with a couple of weeks left in September, we're likely to see SPY come down into this $327 range, and at a very minimum test it as support before seeing a bounce and maybe a continuation of that uptrend that we saw. In any event that these support levels don't hold up, we have to look at these Fibonacci retracement levels, which we have down here at 325 and 305. Now, in any event that this support level at $327 to $325 doesn't hold up, I do think we could see a very quick drop down here to the 300 levels. Now, that level is a strong area of support, and we did see price action back there previously in June after that correction holding up around that $300 level. So I would expect to see significant support in any event that the $327 support level falls out. Our next level is way down there at 305. Now remember, this is a very strong support area in this 327, and we are finding support at the 50 EMA. So in any event that that 50 EMA breaks down and doesn't hold up as support, we're most likely going to see these gaps close very quickly. So right now in the short term, I think the market is becoming neutral, and I think there is still some downside risk. And anytime there's risk in a market, you want to preserve your capital. You don't want to be all in with your money right now because there is a downward trend that we're monitoring. And anytime there's a downward trend, you want to set your price targets of where you're going to add to your position at logical support levels. So right now I would be looking to add to my position at 327. In any event that does not hold up, I would have a stop loss below this level. In any event that the downward trend continues, I could buy back at these lower prices, and if we see a bounce off of 300, we will make back anything we lose by having our stop loss set here. That's just part of being a disciplined trader, is you want to control your downside risk, and you want to have support levels that you're trying to add to those positions. In any event that we do see that bounce, we will have a position and we'll be able to capitalize on that gain. So right now on the SPY ETF, look for these gaps to get filled very soon. And with September still having 2 weeks of trading left, I do think we're going to see a continuation of this correction. Next up is the Nasdaq 100, and we're looking at the QQQ ETF, or the triple Qs. And we see a very similar story with the Nasdaq 100. We see today's price action still closing below that 5 EMA. And remember with the Nasdaq 100, when that 5 EMA is below the 13, that's usually a sign that we're going to be in a bearish trend for a full correction before we ultimately see that 5 EMA cross back above the 13. So right now we have to acknowledge the fact that the Nasdaq 100 is also in a bearish trend, and we do see that the price action continues to close below the 5 EMA. So the market's getting a little choppy right now, and we're seeing days of red followed by days of green, followed back by days of red, and it's just kind of chopping around because it's trying to confuse the traders, and it's trying to get that dumb money out that doesn't know what they're doing. So remember, the smart money is most likely still trying to sell their positions, and they have a lot of volume that they have to get through, so they're not going to just crash the stock market and sell all of their position size in 3 days. They're going to let off the gas on the selling and allow a bounce here or there so that they can continue to sell at higher prices. So right now you have to be patient and you have to wait for this trend to reverse before ultimately becoming bullish on this market again. So right now we do have support levels on the Nasdaq 100 right around the 50 EMA, which is right around this $270 price range. We also have another support level right below that at 264. So look for these support levels to hold up, and if they don't hold up, we would expect to start seeing these Fibonacci retracement levels start coming into play, and on the Nasdaq 100 that would bring us all the way back down to $250. Next up is the Dow Jones Industrial, and we're looking at the DIA ETF. We do see a downward trend on the Dow Jones as well. However, we did have a much better close on the Dow, closing up above the 13 EMA. However, we can still see here with the wick of today's high still finding resistance at that 20 simple moving average. Now, if the Dow Jones can close back above the 20 simple moving average and we can get that 5 EMA to cross back above the 13, I think that's going to start showing that there's been a rotation in the stock market, and we're starting to see some heavy tech selling and maybe a rotation into the industrials. But right now we still have to acknowledge that the Dow Jones is also in a bearish trend, and we are still closing below the 20 simple moving average. But out of all three indices, it does look like the Dow Jones is doing the best at reversing this bearish trend. However, it is not reversed quite yet, and we need to wait for confirmation. We also have to acknowledge that we do have these gaps much lower on the Dow Jones at 268 and at 264. Now, whether or not those get filled now or filled later is to be determined, but we could still be in a correction. And remember, we're expecting an ABC. So we could still be on the B bounce and then ultimately still see that C wave come all the way down and close all these gaps before ultimately resuming an upward trend. Now, the Dow Jones DIA ETF has yet to test the 50 EMA, so it is showing signs of a lot more bullish sentiment with the Dow Jones right now. Now, another thing we need to take a look at for an update is our bearish and bullish sentiment survey, and we do see a significant reduction in bullishness with last week's survey. That's a little surprising. I thought a lot more people would be bullish after that large bull rally that we saw in the stock market. But apparently there's still a lot of people that are very bearish on this market, which tells us that there's still potential for the stock market to continue to go higher. With all of the people being bearish, the stock market's usually going to do the opposite of the investor sentiment. So if all the investors are bearish, the stock market is not likely to just roll over and die, because you would expect to see the bearish sentiment eventually find buying opportunities, and they're eventually going to flip to the bull camp. Now, to put that into a psychological evaluation, it would be like the stock market falling another 3 to 5%, and eventually those bears will see a buying opportunity and they'll flip over and become bullish, and that will cause a bounce in the stock market. So it's hard to believe with that many people being bearish that we're going to see any significant drops or any significant crashing in the stock market. So with all the support levels that we have below us and all of the bearish sentiment, I'm not expecting a whole lot more downside, and it's not like you're holding out waiting for another minus 10% drop. So on the SP 500, remember, we have support levels right below today's price action. Only about $10 lower, we find significant support, and I would expect to see a lot of those bears switch camps and become bullish. Next up is the VIX, which is our fear indicator. And very similar to what I was just saying, the VIX has been decreasing fear as the market's going higher. So fear is starting to leave the market because we're seeing these bounce days and we're seeing the market find support. And instead of that bearish trend gaining momentum, we're starting to see a little bit of a neutral price action where we're getting that chop, where we're getting up and down days, but we're ultimately just going sideways. Now remember, if we're expecting an ABC bounce on the correction, we're also expecting an ABC bounce on the VIX. Now, to go hand in hand with that, the VIX did close right above the 20 simple moving average. So the VIX could have found support today, and we could see fear start to enter the market again now that the VIX has sort of hit a support level. We also still do have the 5 EMA trading above the 13 EMA, which tells us that the VIX still has a bullish trend. So we're seeing everything sort of aligning where we do expect a little more downside in the stock market before more of those bears become bullish, but we also do expect the VIX to find support and bounce and go higher as we see that further correction. So remember, the VIX typically goes higher as the market goes lower. So if the VIX is finding support and the VIX is about to bounce, that would mean there's more downside coming in the stock market. So let's take a look at some of the other sectors driving the stock market. And first up, we have the financials. Now the financials did have a pretty good day today, and we did see the financials close above all of their moving averages. The financials are trading above the 13 EMA, the 20 simple moving average, as well as the 5 EMA. However, that 5 EMA is still below the 13 EMA, so we're still about a day or two away of more upside to have those moving averages cross back over to the bull side. Now the financials did find support at their 50 EMA and are seeing a nice bounce, but we still have to acknowledge the fact that the financials have not formed a higher high. In any bull market, we're going to see a higher high and higher low market, and right now we have not seen that higher high on the financials. So this red resistance trend line here is really holding the financials back, and we would like to see the financials close above that resistance trend line and form a higher high to know that we're going to have a bull market in the financials. And remember, a bull market in the financials will signal a possible further bull market in the SP 500. So it's very important to see if the financials are going to break out of this resistance trend line and form that new higher high. Next up is the industrials, and we do see the industrials having another great day. So the industrials are actually looking pretty bullish right now, which could further our theory that maybe there's a sector rotation going on and we're starting to see some selling pickup in technology and flowing into these industrials. So if you look at the industrials, we did close above all of the moving averages, and we do have that 5 EMA crossing back above the 13 EMA. So we're starting to see a continuation of that bullish trend that we've been seeing after a short correction. So remember, corrections are healthy, and after a pullback in the industrials and we're seeing this bounce, this could be signaling that the industrials are ready to continue their bull rally that they've been enjoying, and we could see industrials continue to rally. Now, whether or not that's going to be at the expense of some other sectors is to be determined, but right now this is a good sign for the industrials. And if the industrials and financials can find their bull markets, then we know the S&P 500 could be right behind. Next up is the healthcare sector, and we do see healthcare did have a little bit of a bounce today, but ultimately still closing below its 20 simple moving average, where it's also finding resistance at that level, and we still have the 5 EMA trading below the 13. So it's too soon to say if the healthcare sector is bouncing back from this bearish trend, or if it's simply just more of that B bounce before we resume our downward trend on this correction and ultimately find lower lows on the stock market. Next up is the US dollar, and we're looking at DXY. And remember, as we see the dollar strengthen, we expect to see further corrections in the stock market. So right now with the dollar, we do see it in a bullish trend with the 5 EMA above the 13 EMA and the price action closing above the 13 EMA as well as the 20 simple moving average. So with the dollar possibly finding more strength after this support level finding a bounce, we could see that opposite of the ABC correction in the upward direction on the dollar, which would further our theory that we're going to see more correction in the stock market. So if the dollar did indeed find support at its 20 simple moving average today, and it's going to continue this upward move, that's going to be the dollar strengthening, and we would expect to see these asset prices continue to correct. So right now we see support levels on the dollar and the VIX, and if they do see a bounce, we would expect to see further downside on the rest of the stock market. So it's very interesting how everything's aligning right now, and there's really nothing that abnormal that we're seeing. Everything seems to be going exactly as planned, which tells me I would expect to see September continue to be that correction month in the stock market. And ultimately, if you're not sure what to do, if you just wait a couple more weeks, it'll be a lot more clear what's going on in the stock market, and you'll have a lot better knowledge on what positions you want to enter to possibly hold out through all of fall and winter to finish out the year. Next up is gold, and we do see gold also continuing its balance after finding support. So gold is now going into what looks like the beginning of a bull market, because we have that 5 EMA starting to cross above the 13 EMA, and we do have gold closing above the 20 simple moving average. So the next thing we need to watch for gold to do is come out and take out this previous high and form that higher high, and then we will have all of the signs we need to say that gold is now in a bull market. If gold can close at a new higher high, I would expect to see it break this previous high back here and ultimately go and make an attempt at forming a new all-time high. So right now, everything on gold tells us it's possibly going higher, but we don't expect gold to keep going higher if the dollar is strengthening. So we're really at an inflection point right now where we need to see if we're going to see further upside on that dollar and further downside on the stock market, because right now gold is telling us it wants to go higher. Next up, a quick update on our FOMO stocks, and first up we have Apple. And we see Apple getting very choppy in this area, kind of going just up and down, but really not going anywhere. And we do see Apple still in a bearish trend. So that 5 EMA is still below the 13 and Apple's still closing well below its 5 EMA. So it is possible Apple is seeing that B bounce and we're going to see it come up and test that 20 simple moving average and find resistance and then continue down to close out the C wave, which would also close out these gaps that are opened up. Now, right now, it's too soon to say if Apple's going to continue its downtrend because it did find support at its 50 EMA and it's starting to bounce. But if we're going to see a reversal in the bearish trend on Apple, we want to see these closes above these moving averages, and we want to see those moving averages to stop acting as resistance. So right now, it still looks like Apple has more downside to go, and that's kind of what we're seeing on the other technical analysis, is it looks like the stock market still has another week or two to consolidate and further correct before resuming any upward trends. Next up is Tesla, and we see Tesla having a great day today, closing up 12.5%, but we do still think this is an ABC correction. So Tesla had this sharp decline followed by a bounce, and then ultimately we would expect to see that further downside to finish out the C wave. Now Tesla does look like it found support at its 50 EMA, and it did have a 0.382 retracement down at this level around $330. Tesla also closed above its 20 simple moving average, but that 5 EMA is still below that 13 EMA, so it's still too soon to say that Tesla has reversed its bearish trend. We would still need another day or two of upside price action to see that bullish trend confirmed, and we would like to see if Tesla is going to continue higher before entering at these high valuations. A quick update on Bitcoin is we did find support at the previous breakout, and we are seeing Bitcoin confirm its move to the upside. So Bitcoin's also finding support and starting on what looks like the beginning of another bull rally, but we do not see confirmation of those 5 EMA crossing back above that 13 EMA just yet. However, we did see a nice day today, and Bitcoin looks like it's ready to start going higher. So going back to the SP 500, I would still recommend being very patient and manage your risk at these levels, because we still do have some better buying opportunities ahead if the stock market's going to continue to correct. And we're only a day or two away from knowing what the stock market wants to do. So practice patience and watch that price action and watch these critical levels on the S&P 500. The most critical levels to watch right now are the 50 EMA around 332, and then these gaps at 330 and at $327. Those are great support levels to start adding to a position, and remember to watch out below if those break down, because we could come all the way back down to 305. So if these videos help you out, please remember to help me out by smashing that like button. And if you want to follow along on all of my technical analysis, remember to subscribe to my channel. So thanks for watching, everybody. And as always, I will see you in the next episode.